Hey guys, what's up? This is Akanksha. Welcome back to my channel. This video is the continuation of my last video, which was on debt funds. I'll put the link in the description box below. If you haven't watched the video yet, then go check it out and then come back. In this video, I'm going to talk about what are the things to keep in mind before buying any debt mutual fund and what are the ways to invest in debt funds. I'm not a financial advisor. I came across this investment option, which is way better than FDs in my opinion. So this video is completely based on my research and my experience. I really hope you find this video helpful. And if you do, then please like this video, share it with your friends and family, and also subscribe to my YouTube channel. Once you figure out your goal to invest, the tenure of investment and the suitable category of debt mutual fund according to your need, then the next step is to select the right debt fund in that particular category. Now let's see what are the things to keep in mind before selecting any debt fund. I will also include few examples with each step so that you can better understand the topic. The first thing to keep in mind is credit rating. You need to find out whether the debt fund has good rating or not. Morningstar is a global website to check the rating of any financial instruments. And other than that, there are value research website and money control, which can show you the CRISIL ratings. If the given credit rating is higher for any debt fund or bond, then that means that particular debt fund or bond is less risky. So you can check for higher rating instruments in the sites and choose few low risky funds. Let's say I want to invest in a banking and PSU fund, which is better for 1 to 3 year investment. Then I will open the Morningstar website and I will set few filters according to my need. As you can see, the website has given me so many different options to choose from, but I will look out for the debt funds which have higher credit rating. So I am going to choose 2 debt funds and then compare them. The first one is Axis Banking and PSU debt fund and the second one is IDFC Banking and PSU debt fund. The reason I choose these 2 funds because they have good ratings on all the 3 websites, Morningstar, Value Research and Money Control. Now I am going to open them separately to see their credit rating. Here you can see the credit rating of Axis Banking and PSU debt fund is AAA, and for IDFC Banking and PSU debt fund the credit rating is AAA as well. That means they both have good credit ratings. The next parameter is risk matrix. I've explained credit risk and interest rate risk in my previous video. So as a second parameter, we have to check the credit risk as well as the interest rate risk of any debt fund. So for this particular fund, the risk matrix would look something like this. It means Axis Banking and PSU debt fund has high credit rating and the interest rate sensitivity is low. That means the chances of interest rate fluctuation is low. Let's check the risk matrix for IDFC Banking and PSU debt fund. Here the credit rating is high and the interest rate sensitivity is low as well. That means the chances of interest rate fluctuation is low. The third parameter is expense ratio. This is the aggregate of expenses incurred for running the debt fund scheme. So the preferred choice would be where the expense ratio is significantly low. And you should calculate the returns from debt funds after taking the expense ratio into consideration. You can check the expense ratio in any of the 3 websites. Let's check it in Morningstar website. You can go to the fees tab and check the expense ratio column. Here the expense ratio for one is 0.33% and for the other one it is 0.32%. So for now, IDFC Banking and PSU debt fund has slightly upper hand. The next parameter is AUM, that is asset under management. If AUM of any debt mutual fund is higher, then its capability to give higher returns is also high. If AUM is higher, that shows so many people have invested in that particular debt fund, and it also indicates that it has the capability to buy bigger bonds like treasury bills or bonds from RBI, etc. A large fund size would also mean a lower expense ratio per person, which will be reflected in the fund returns. But it does not work same for the equity funds. If the AUM of any equity fund is higher, then its capability of giving returns is lower than average. For checking the AUM, you can use any of the 3 websites. In the Value Research website, you can see the net asset value in the last column. Here the net asset for IDFC Banking and PSU debt fund is 16,162 crores and for Axis Banking and PSU debt fund, it is nearly 14,171 crores. I prefer the debt fund with AUM more than 5,000 crores, so both of the funds are good so far. The next parameter is modified duration. It is very important to see the modified duration of any fund because it tells you how much interest rate fluctuation can happen in the future. For example, if the modified duration is 3 years for one debt fund and for other debt fund the modified duration is 7 years, and if the interest rate fluctuation happen in future, then it will affect the second one the most. For checking the modified duration, you can use the Value Research website. You can see the modified duration in the Portfolio tab. Here the modified duration for IDFC Banking and PSU debt fund is 0.73 and for Axis Banking and PSU debt fund it is 0.85. So far both the funds have comparable value for all the factors. The next parameter is past performance. It's also good practice to check the past performance of any fund to see how the fund has performed over the years. I'm using Money Control website for checking the past performance. Here you can see the performance of the funds clearly. The next parameter is fund manager. It's also important to look out for fund manager history, how many funds he has handled and for how long he is handling the current fund. So many decisions like when and what financial instruments to buy and when to sell in the secondary market are decided by the fund manager. So they play a very important role in handling your money and it is better to go through this factor as well. For example, a fund is giving good performance from last 5 years, but recently the fund manager was changed for that particular fund. Then it's not logical to judge this fund only by the past performance because the past performance was from different fund manager. For checking the fund manager's history, you can use the Value Research website. Here the fund manager for Axis Banking and PSU debt fund is associated with the funds since August 2016. And for IDFC Banking and PSU debt fund, the fund manager is working on it since December 2021. So I cannot judge IDFC Banking and PSU debt fund with the past performance as it was from the different fund manager. So here, considering all the factors, Axis Banking and PSU debt fund has upper hand and currently it is best in banking and PSU fund category. After analyzing all these things for any debt fund, you can choose the suitable debt fund for you. You should also revisit your decision in future to check if they are still valid or not. Also, it is better to be updated by the market changes. Now let's see what are the ways to invest in debt mutual funds in India. You cannot invest in any mutual fund or debt fund if you have not completed the Know Your Customer, that is KYC process. KYC is a government regulation for most financial transactions in India to identify the source of funds and prevent money laundering. To become KYC compliant, you need a PAN card and a valid address proof. You can also complete the KYC process online through eKYC, where you enter the Aadhaar and PAN details, and after verification and transferring the money from your bank account, you can start investing in mutual fund or debt funds. Any investor can start investing in debt funds using either the single lump sum payment option or the more flexible systematic investment plan, that is SIP option. You can start the SIP with regular contribution interval of monthly, quarterly, semi-annual or annual payments. There are 4 different ways to invest in mutual funds. The first way is to buy the mutual fund through asset management company or AMC. It can be done directly online or offline by visiting the AMC local office. In the online process, you have to follow the steps of opening a new account, providing your personal details and bank details for investment. Then you will have to fill out the FATCA form, and then after verification of KYC, you can transfer your money and buy the debt fund. And if you want to do it offline, then you can visit the AMC local office and submit the application form and KYC document. And after that, you have to make the payment to buy the debt fund. The next way of investing in debt mutual fund is using online investment platform. You can invest in a hassle-free manner by using an online investment platform. You can use Zerodha, Upstocks, 5paisa or Grow as your investment platform. In these platforms, with a single account access, you can invest, track and manage all your debt mutual funds or equity mutual funds with different AMCs. To invest using an online investment platform, you have to create an account with the investment platform. Then you have to pick up the scheme or plan and choose the payment type. And then you will have to fill up few personal details like PAN and bank details. And then after transferring the money, you can complete the investment. The next way to invest is through Demat account. If you already have a Demat account, then you don't need to make any additional effort for investing in debt mutual funds. Your existing demat account and bank account can be used for investing and any transaction in the mutual fund. You can log into your demat account and look for the options to invest in the debt mutual funds. And in the next step, you need to choose the fund in which you want to invest. And after transferring the required amount, you can buy debt mutual fund or any other mutual fund easily. Here is the rating and ranking for different brokers in India. You can choose the one which provides services with less brokerage. The next way to invest is purchase through an agent. This investment can be made through an agent. You can call your agent, who should be a debt mutual fund distributor, and you can hand over the filled in application form along with the copy of all your KYC document and cancel check. I would personally not recommend this method because it is costly and time consuming method to invest in debt mutual funds. So this was my video on debt funds. I hope these informations were helpful, and if they were, then please like this video, share it with your friends and family, and also subscribe to my YouTube channel. Thank you so much for watching the video, guys. I'll see you guys in the next video with something new. Until then, stay safe. Bye-bye.